Okay. Thank you very much, everyone, for coming here today. We're going to discuss the crypto neobank revolution for what it is. So the way I see it is we first had traditional banks, trusted, regulated, slow. Second, we had Web 2 neobanks, better design, faster onboarding, great UX. And then we had crypto, which tries to upend the system entirely and offer something new. So in this stage, we have three different paths towards creating that new system. We have an institutional infrastructure platform in Hex Trust, Web3 native model in EtherFi, and kind of a more mass consumer platform in Kraken. Now, they don't call themselves banks, but they do a lot of bank-like things. You know, yield, offer credit, store value, opportunity to speculate perhaps. And we're going to discuss a lot of that today. But my name is Liam Murphy. I'm global president of Wachsman, the largest strategic communications firm in crypto. And I'll ask each of my esteemed panelists to give a brief introduction of themselves. Alessio?
This is Alessio Quaglini. I'm the CEO and co-founder of Hex Trust. Hex Trust is a financial institution for digital assets. We started in 2018 as a custodian born here in Hong Kong. Today we're a diversified financial institution. We provide a broad range of services from custody to staking, OTC and financing services.
My name is Kopp. I'm the co-founder of EtherFi. EtherFi is a crypto neobank. We're one of the largest DeFi protocols built on Ethereum. We have three products: a staking product, a liquid product, and a credit card product. Look forward to chatting.
Sweet. Hey, everybody. Mark Greenberg. I lead the consumer business here at Kraken. Part of my portfolio is leading Crack, our money app, which I'm pumped to talk about today. Ooh. Money app, not banks. So looking forward to it.
Cash app.
So let's start there, Mark. What, in God's name, is a crypto neobank?
Well, if you really think about it, I think you said it already, right? Like a neobank, crypto is just another way to move things around, right? So if you are using stable coins, whether you're using fiat, whether you're using tokenized equities, all of those things can actually be money. They can be used to buy, sell, they can be used to send, receive, they can be used to, they can be borrowed against, they can be used to pay your credit card. And so it's just a natural thing for an exchange like Kraken to think about how we take what we used to do, or we still do on the crypto trading and investing side, and bring it into banking and just make it banking better. What is a neobank? It's just the ability to do all the things you would normally do in banking.
Okay. Anyone disagree with that or like to add anything to that?
No, same thing for us. When we think about a neobank, just anything that you do on a daily basis with money, we want you to be able to do that through EtherFi. So I think that's exactly what it is. And I think neobanks remove a lot of the obstruction you get from historical banking, a lot of the paperwork you have to go through, et cetera. Take your money, pay for things, move on. And yeah, so really focus on the user experience.
Okay. I think a question that a lot of people will ask is why we need a Web3 crypto neobank. And like maybe Alessio, you can touch on, and anyone else on the panel with thoughts. Is there like what could a Web3 neobank do that a Revolut or a Web2 neobank fundamentally can't do?
Yeah, so the issue is that we started with banks that have old UX and they're locally located and not interoperable with the rest of the world. Then we had this kind of neobanks that have much better UX, but they're still local. They cannot operate at a global level. So then we had this kind of fintech companies that were born to basically connect different parts of the world and process payments across the globe. They have very good UX and they have this kind of interoperability. But this interoperability is built by connecting different banks in different parts of the world and creating this kind of interoperability by deploying capital in different parts of the world to make kind of the user experience global. But basically, you are replacing the local essence of the bank with capital deployed all around the world. A crypto neobank is something that does not need to have this kind of ties with the local banks in all the different parts of the world, but has a global balance sheet and a global liquidity, combined obviously with the UX that we're now used to.
So would you agree that neobanks win by being fundamentally global in nature? Or is there a need to be deeply local too?
I think you have to be deeply local. One of the advantages that we have at EtherFi is we never take custody of the assets. And so because of that, we can get global very quickly. But one of the things that we've seen as far as picking up adoption is not having localized languages. So for instance, that Taiwan and Hong Kong are two of our larger markets, but we get a lot of users who onboard, start using, and then they stop because they can't read through the app. And so I actually think you have to have a very commerce is very local. You have to have very local parts of your application. So actually in Q1, we'll come out with a Mandarin app for people, and I think that'll unlock a lot of things. But how I view it is we have a global market, but you need to customize to a local market if you want to kind of adopt within them.
Yeah. Look, if you can't pay your bills in whatever quirky system your home country has, it's really hard to use a neobank that is global in nature but doesn't actually do the things you need locally. If you can't top up your Octopus card here, probably don't want that as your main bank. I see lots of, at the same time, as a Canadian, I don't necessarily want to hold my balance in Canadian dollars anymore. I've watched the Canadian dollar do all sorts of crazy things. I travel the world. I'm in many different countries. Why can't I hold my balance in US dollars or in US stablecoins or in the S&P 500? Why can't I earn 4, 5, 6% on my current account? Those are the kind of things that my neobank or my bank aren't really doing for me today. And those are the kind of things that are super easy with a crypto-based bank. And so, on Kraken today, you can earn 6% on USDC. That's unheard of in the traditional banking world. I look, as a Canadian, getting any interest on a Canadian bank account, basically impossible. So I look forward to the ability to bring those kinds of experiences to people around the world and giving everyone around the world the choice to choose whatever they want to be money, not just whatever their local government and their local banks think is money.
Nice. And as I said, each of you are on a journey, and your company's on a journey to fundamentally become a trusted financial platform. You're doing it in very different ways. And I'd ask you, what do you think you are fundamentally doing better than even your crypto or Web3 competitors? Alessio?
Well, for us, we don't really aim to be a crypto neobank. We want to be basically the infrastructure and the pipes that allow other platforms to become crypto neobanks. So for us, what's really important is to abstract away from all the difficulties, the complexity of the different blockchain protocols. So to make this kind of relationship between the service level layer to the underlying technology completely seamless. And obviously we need to wrap it up together with the whole security layer, the governance, and basically the adherence with the compliance with the local regulations. I think if you ask me really what we do better, we combine all of this to make it really simple for institutions to operate in this market without having to worry about all these different layers of complexity.
And Mark and Rock, obviously you have like more of a kind of mass consumer model, and you're more Web3 native. What do you think each other's strengths and weaknesses would be in your particular approaches?
I'm not the reality is I'm laser focused on beating HSBC and JP Morgan and Citibank. That's where the real value is. There are lots of good models to take the best of crypto and put it into banking services. We've chosen one. Rock's chosen a different one. Both are they're actually both amazing products. And I just look forward to the fact that I don't have to use my shitty Scotiabank account in Canada anymore. That's far more where I'm excited and focused on. Lots of different models are going to win the same way there are lots of different models in banking today. And depending on specifically what an individual user is trying to optimize for, it'll be a little bit different.
Yeah, I think that that's actually super true. If you think about banking currently, there's a bunch of local community banks. There's going to be a lot of different flavors of neobanking, and a lot of people are building this, right? Like Robinhood is coming like from a very traditional Web 2, but into Web 3, and so the most exciting thing to me is this is actual real world use case for crypto. There's not crypto's been a casino for so long that people just buy and trade and hold assets, and there's actual real utility for this. So I think the most popular feature for us is that you can give everyone the power to borrow, which is and spend in real time, right? So often as a retail user, you have $5,000. A bank isn't going to give you a line to borrow against if you don't want to sell the S&P 500. So you have to sell you sell your stock and then go, and now you start to spend. Where with us, you could just hold that and spend against it. And there's nothing else to do, right? Like the blockchain facilitates this. We're not like a resource intensive company. And so I think that that's just really important. The user's who wins here. The user wins. There's gonna be lower fees. You're gonna be able to catch the flavor that you want. There's gonna be a lot of incentives thrown around. So it's a really, really good opportunity actually for users over the next 5 to 10 years, I'll call it.
And I think there is a very clear case from a product point of view, but ultimately it'll kind of come down to trust as well, right? And I'd be really interested from all of your perspectives, like what the most common misconceptions a potential customer has about you and your product, and how you actually, what works best to get their trust so that they are incentivized to use their financial assets or to migrate them onto your platforms.
Yeah, I mean, trust just takes time, right? It's doing what you say over a long period of time. For better or for worse, crypto's damaged trust quite a few times. And so we just try to stick by what we say we're going to do. And so if you think about it, when you take a credit card and you pay, that card has to go through 100% of the time, right? So right now, our transactions go through 98.5% of the time. That's a lot of transactions that fail, right? Like that's a crazy amount. So you have to earn trust by just doing what you say. And so there's, we're still really early in this game, but that's how you earn trust over time, giving people a great experience, doing what you say. And I think that kind of just takes care of itself.
Look, when you use a traditional bank, nobody's thinking about the Cobalt's mainframe system that's underneath it. Nobody's thinking about the network it was built upon. Nobody's thinking about the React Native code that goes into the mobile app. That's got to be the same place that we get crypto banking to. I think the biggest misconception here is that you have to actually really understand crypto, and then you have to be deep in it, and you have to be using it in order to be able to use one of these money apps that we're building. And that's just totally not the case. And I think that the more we actually get away from it being branded as a crypto bank or a crypto native bank or a Web3 bank, the better. And then, why do you trust a bank? You trust a bank because it's just there to make things work every time you need it to work. And that's just something that comes with time.
Alessio?
Well, I think, completely agree with them. I think the main misconception here is that blockchain technology is kind of a client-facing technology, right? Mm-hmm. Blockchain technology is a back office and operations-related technology. At the end of the day, I would like to see exactly, I don't want to change the UX that I have with my bank today. I want to have exactly the same UX. I don't want to be able to withdraw US dollar from my bank account and have to choose whether it's on Tron, Ethereum, Arbitrum, or 300 different networks. I want to have US dollars, right? All these other complexities that the blockchain is currently, and the market players are currently exposing the users to, that should disappear. Yep. At a certain point, they have to go back to the back office. And we need to focus on really exploiting the advantages of the blockchain technology and making the user experience better, cheaper, faster.
Just before we came out on stage, we were talking, as so many people here are, about the Bitcoin price. And what I'm really curious about, again, as a comms professional, what you think the impact on adoption and trust in your products is based on Bitcoin price volatility. So because, I mean, I know, Mark, you talked about, inflation and holding in Canadian dollars, etc. But do you think trust decreases and adoption will decrease of your particular platforms and products based on Bitcoin price performance?
I think oh, go ahead. Go ahead.
No, but please, go ahead.
No, I think I'm going to repeat what I said before, so I'll keep it really short. The more we talk about this as a crypto bank, the more we connect what we're building to Bitcoin directly, the worse the product will be in the end state, and the less likely we will have the mass adoption that we need. The more we just talk about money apps that do all the same kind of things banks do today, and it's just as simple and easy to use, the better. So I hope, and actually work really hard to more or less ignore the Bitcoin price with respect to the Crack app that we're building. The Crack app is, you can hold Bitcoin in it if you want, but you can also hold Canadian dollars or the S&P 500 or Tesla. And so why would any one asset actually make a big difference into how the app actually works?
So, I mean, for adoption, the thing is that in today's world, most of the platforms in the blockchain space, they're trading platforms. So obviously, if the Bitcoin price goes down, the daily active users of trading platforms will decrease, right? But that is not the case if your platform is basically processing credit card payments, or it's a cross-border payment platform, or it's a lending and borrowing platform collateralized by money market funds or other tokenized assets. So I think there's still lots of attention on the casino and trading aspect of the blockchain protocol, which brought a lot of users to the blockchain world. But I think it's time that we move away from that and we actually go into the real world use cases.
Yeah, I mean, I totally agree with what you guys are saying. The more we can abstract crypto, the better. The user experience of crypto is not good. Like as long as we improve that, people will start to see the benefits of self-custody, fees going down, etc. So I don't think the Bitcoin price impacts it. To be honest, I don't think that does. It's just self-custody and being able to bank and make it. I mean, undoubtedly, and you see it, right? Like Robinhood is coming into crypto in the States. Revolut is coming into crypto because crypto rails are more efficient, they're better, they're faster. And so that's, in general, that's very bullish for crypto. And you should see that, adoption will continue to increase. But there's a massive war chest, right? There's a massive war chest. And this is all about customer acquisition. That's what banking has been for hundreds of years, is just how do you acquire customers and then get them to stay in there and stick. I do think that banking will continue to be sticky. Once you get a customer in there and it becomes their primary banking app or card, it's painful to move that. So, I do think it's kind of a race the next, 5 years or whatever. And there's no way we could have just started with a card product. We already had pretty good distribution and we were able to kind of take it from there. I'm sure Kraken, Hex Trust, same thing. There's already a good base there. And then you expand the offering. Because you're certainly going up against like heavy competition here.
Nobody's going to win just because they're a crypto bank, and no one's going to lose just because they are. And that's, I think, exciting. So yes, we have to compete against all the other neobanks out there and continue to be better. They're going to take the best features that we're producing on chain and they're going to bring it into their experiences. On-chain is hard, and yes, Revolut and Robinhood and others have made some steps into that, but probably not as much as folks have been doing it for a long time. I'd also say we're coming after their lunch too, right? So, the reason I'm spending a lot of time here is we're talking a lot about X stocks, which is tokenized equities, which is coming directly at the Robinhoods of the world. And I think that's just healthy for us to bring the best of what blockchain and crypto and Web3 can bring to the table, alongside what the best of what neobanks and the traditional markets can together.
Amazing. And do you think stable coins can be characterized as a consumer product, right? Or are these just rails that facilitate other things? Because in so many cases, like that kind of instant finality, ease of payments is kind of a big thing that crypto has brought to the world. Can that be shaped and characterized as actually a consumer-facing product that can attract customers? Alessio?
I think so. I think so. I think stable coins are probably if I may say this, probably the first kind of user-facing product that the blockchain has brought to this world. Yeah. The second one is probably money market funds, right? Tokenized. I mean, we don't even see the difference, but one doesn't pay a yield. The second one is basically a stable coin that pays a yield, right? And this was unthinkable. Think about having a transferable saving account in the banking world. These are just the examples, and they have shown the community that there can be a big leap of improvement if you apply new technology to all concepts. This is just the beginning. The other products will come, and likely we had this stablecoin to show that there can be a real improvement in efficiency when you replace the old technology rails with new rails.
I think people forget how hard it is to move money around because there's a lot of good UIs that sit on top of it and make it seem a lot easier than it actually is. And so they make it seem like there's instant settlement behind the scenes. They make it seem like you can easily move money from one country to another via PayPal or something like that. None of that's actually true. There's a whole ton of hand waving and things that go on behind the scenes that are very expensive to make those things happen. And that's what I get excited about for stablecoins. Again, do I think stablecoins have to be at the front? Are they really a part of the UX or the UI experience that you see as a user? I actually hope not. I hope we can abstract it away. But at the same time, is it much easier to move a USDG or USDC or USDT between us here if I wanted to pay you back for something? Way easier than trying to do it in US dollars right now. So stablecoins for sure a consumer product, but do consumers really need to know they're using stablecoins? Not totally sure.
And I guess what people really do need to know is that their money is safe, right? And Alessio, what do you think? I mean, this is very much your neck of the woods. What do you think of the non-negotiable safeguards that are required around custody, segregation of assets, what have you, that are required to make sure that consumers can trust platforms?
I mean, this is paramount. Unfortunately, the blockchain technology really replaces a centralized trust with something that is a little bit more decentralized. And unfortunately, the centralized CSDs, they're replaced by the blockchain, but this doesn't really replace the issue of trust and safety. So you need to have companies, either it's on the user with self-custody or it's on the custodian company. They have to take this responsibility and they have to kind of bring this layer of trust to the ecosystem. If you cannot trust that your money will be in your account tomorrow, it's not even a problem of front office, back office, user experience. We don't have a market.
Yep.
Yeah? This has to be taken for granted, and companies like Hex Trust, I mean, need to take this burden of responsibility, and it needs to come, unfortunately or fortunately, with regulation, governance, and all of these things that probably make the industry a little bit slower, but more secure, and as a necessary step for user adoption.
Well, but actually, when I went to school here in Hong Kong in 2008, there was an actual run on a bank here locally. And I always like to point out that people don't really know how safe their money is in their bank. You just trust it because you're used to trusting it. Something like 5 or 10% of the money that people put into a bank is actually held there, and the rest is an IOU that's then used for many other things. That works because there's insurance and because there's backstops. I actually think a lot of those things come into the crypto ecosystem as well over time. So first, crypto banks are far better reserved. If you're on Kraken, you're 100% reserved, or even more. That makes it really easy, I think, to trust, and there's lots of audit systems and proof of reserves and those kind of elements to do that. And then secondly, I do think one of the things I'm excited about for the next few years is bringing more of those kind of insurance products into what we do. We're not going to have FDIC insurance because we're not a bank, but why can't a money app have the same kind of pooled insurance schemes? And that's something I think will bring trust over time as well.
This is one of those things, again, it'll just be time, but is the generation growing up is so comfortable with their phones. They've done everything on their phones. And so it's just what you get comfortable with. I think transacting and doing commerce through your phone is just going to be second nature. And so I I think it's more mental. It's a mental block more than anything right now. I do think there's this balance between self-custody. A lot of people don't want to self-custody because it's hard to sleep if you're like, I have all my assets here. But like, there's been people who've done self-custody for years, right? They just hide cash in their mattresses because they didn't trust a bank. So it continues to be an issue, and it will be. But I think over time, people will get more and more comfortable with crypto and where the assets sit.
And to finish off, I'd be really curious to look a few years in the future and maybe see, like, what do you think neobanking looks like in 2028? Like, what features and products do you think will be on the market, either delivered by yourselves or else just the market more broadly, that aren't yet created or aren't yet consumer facing? What's coming around the corner that we don't know about?
I always make the same example. I mean, in a few years, I would like to go to the convenience store, paying with my phone, choosing what kind of stock I want to use to pay for my Kit Kat, pay with my phone, basically automatically selling my whatever HSBC or Tesla stocks, and the convenience store will choose what kind of currency they want to receive. I would not even know what I'm paying in. They would not know what I'm selling, but the whole transaction flows seamless from me to him through a blockchain infrastructure.
Yeah, I think if I think forward 5 years, I think neobanking won't even be a term, right? It's just gonna be banking, and that's how you transact with your day-to-day life. But basically, any asset that you want to hold can be held, used, borrowed against, and then real life spending. So, combine any good aspect from a financial application that you see currently and bring it into one app. And there's a lot of people running at this from a lot of different angles. Again, I think the person who wins on this is the end user, because I just think banking's about to get a lot better for the global world.
Yeah, I look forward to a world where I can decide what my money is and what I want to hold as money. I look forward to a world where I can earn the yield directly and I don't have to rely on the 50 basis points that the bank will give me, And I look forward to a world where we have a lot more choice in our banking services and a lot more opportunity in it. And I think everything that we're building here is going to help make that happen.
Love it. So an awful lot to look forward to. Alessio, Rock, Mark, thank you so much for a great discussion.
Thanks so much.
Thanks.